Hi, my name is Amy, and thank you very much for watching. So, let's make some bad financial decisions together. When I was walking home from dinner, I had dinner with my dad tonight. I was thinking, let's let's talk about my risk tolerance because the my my risk tolerance is very different depending on the context. And in my particular situation right now, I've been trying to sell my condo for 16 months and I'm losing $3,000 a month. So I have been losing $3,000 a month for 16 months. I am ready to make money in the stock market, let me tell you. So, my risk tolerance for the stock market right now is very high, but I am naturally a more cautious person. I just view the stock market as like, if it goes down, you do not sell. You just wait through it. It doesn't feel great, but if you don't panic sell, for the most part, when you get to the other side, you'll do much, much better. But I did look for some risk tolerance quizzes just to see, because I'm probably going to be like, no, you need to invest in a high yield savings account because that's the type of person that you are. But I mean, it might be fun to do this together. So I found this one. It is from Rutgers. Um, in general, how would your best friend describe you as a risk taker? Are you a real gambler? Are you willing to take risks, cautious, or a real risk avoider? I am cautious. We'll just put it at that. I am obsessive. Number two, you're on a TV game show and can choose one of the following. Which would you take? $1,000 in cash, 50% in 5,000, 25% in 10,000, and 5% in 100,000. And my initial gut feeling is I just want $1,000. Thank you. Goodbye. But this is kind of like with ETFs and single stocks and leverage stuff. I would go with B. Like, I have a 50-50 chance of um, winning $5,000, and that's better than $1,000, but it's not too crazy. We have half a chance of doing it. You have finished saving for a once in a lifetime vacation. 3 weeks before you plan to leave, you lose your job. You would A, cancel the vacation, B, take a much more modest vacation, C, go as scheduled, reasoning you need time to prepare for a job search, or D, extend your vacation because this might be your last chance to go first class. And this actually happened to me. I had planned, it was my mom's dream vacation to go to Africa. And so I was like, yes, let's go. And then I didn't lose my job, but there was a big meeting, and all of me and the other developers were like, we're going to quit in protest of how this meeting went. But I had to go on my vacation first, and I took much longer than everybody else to find a new job. But yeah, it was not a great. It was risky, but I do not regret going to Africa with my mom. So the answer here is C, because I've done it. So if you unexpectedly received $20,000 to invest, what would you do? Deposit in a bank account, money market amount, or CD, basically cash equivalent. Invest in high quality bonds or bond mutual funds. Invest in stocks or stock mutual funds. The answer is C. It's always going to be C. And I don't care. That's the answer. None of the other answers are correct. In terms of experience, how comfortable are you investing in stocks or mutual funds? Um, all I have to see is C. Not. I'm very comfortable. I don't enjoy. bonds have not been doing super well. CDs have, when they're incredibly high interest rates, higher than they are now, setting up CD letters not the worst thing, but I do not. You can invest in an ETF and get the same return, and it's riskier, but you also don't have you're not locked into a time like that you have to be in the certificate of deposit. So not comfortable, somewhat comfortable, very comfortable. I'm putting C. When you think of the word risk, which of the following words come to mind? Loss, uncertainty, opportunity, or thrill? Maybe, well, not D. It's between B and C. Like, risk is just education. You just have to educate yourself on under what circumstances is this going to be bad, and is it expected, and if there's a temporary loss, then it's fine. So I guess C. Some experts are predicting prices of assets such as gold, jewels, collectibles, real estate. Oh my gosh. Please do not talk to me about real estate. F real estate. No. Do not invest in real estate as an investment unless you're doing a bunch of them to increase in value. Bond prices will definitely fall. However, experts tend to agree that government bonds are relatively safe. Most of your investments are now in high-interest government bonds. Why would I do that? What would you do? Hold the bonds? Sell the bonds, put half in money market accounts, put the total into hard assets, sell bonds, put all money into... Sell the bonds and put them into equities and actually earn money. I guess hold the bonds, because you can't just change your investment strategy based off of temporary market conditions. You need to do your research and hold to your convictions. Okay. Given the best and worst case returns of the four investment choices below, what would you prefer? A $200 gain, best scenario, $0 worst case, 800 gain best, 200 worst, 260 gain best, $800 worst, 480 best, and 240 worst case. D. And I'll tell you why. Because in real life scenarios, you can put in stop losses, but even if you had a $240, $2,400 loss, it's unrealized loss. So you can just keep it in the market, and eventually it will be a gain or neutral or close enough that you don't care. So D. In addition to whatever you own, you're given $1,000, a sure gain of $500, or a 50 chance. I'll go with, what time frame are we talking about? I guess A. I think, hold on, I think my dog wants to come inside. I think I left him outside. Hold on. Hey, sorry about that. My animals are all going to stage a revolt here soon because they have not had dinner yet, but sure. In addition to whatever you own, you've been given $2,000. You're now asked to choose between a sure loss of $500, B. Yeah, I think B. Suppose a relative left you an inheritance of $100,000. Thank you, rich relative. Love you. But I would rather you be here. Stipulate in the will that you invest all the money in one of the following choices. Which one would you select? A savings account or a money market mutual fund? A mutual fund that owns stocks and bonds. How old is this? Anyway. I think I would choose B, but C is also acceptable because you could do like Nvidia, which is 1/3 of the entire stock market, and then Johnson and Johnson and get your dividends that you need. You are actually pretty diversified, like diversified enough at about 20 stocks, at least so I've heard. If you had $20,000 to invest, which of the following investment choices would you find the most appealing? 60% low risk, 30% low risk, 10% low risk, 40% medium risk, 30, 40, 40 medium, or 10, 30, and 50. I would probably choose C. B is also, it's more like the traditional 3-fund portfolio, but I think I would do 40, 40. 50 medium, 40 high risk, I think. Somewhere between B and C. Your trusted friend and neighbor, an experienced geologist, is putting together a group of investors to fund an exploratory gold mining venture that could pay back. Sorry, my cat has making motions like she wants to pee on my desk. I took them all to the vet last week. One for an ear infection, the other one for a bladder infection. So, anyway, so that's what my distraction is tonight. So we have a geologist putting together an investor group. The venture could pay 50 to 100 times the investment of success. If the mine is a bust, the entire investment is worthless. There's only a 20% chance of success. Well, right now, nothing, because I have no money. But I don't know. Probably nothing, because I don't believe in this. It's not my jam. So I'll do A. Okay, so this is a 13 point question. So C, I got 2, 3, 4, 3, C, 3. Kind of feel like I should get, I just, new sheets. Okay, so 1, we chose C, so that 2, 3, 3, 5 was C, so that is also 3. 6 was C, which is 3. 7 was A, which would be a 1. 8 would be D, which is 4. 9 is A, which is 1. 10 was B, which is 3. 11 B, which is 2. 12 was C, which is 3, and A is 1. So 31. So I have an above average risk tolerance, I guess. No lies though, I would not be putting anything into bonds or mutual funds. ETFs all the way, equities, okay? Risk tolerance quiz. Let's see if I can. It was not the Morningstar one because that was not an actual thing. I think this one? Start the quiz. Accept. So I think 38 and 65, so like 10 to 15 years. Not more than 15 years because I have retirement money for retirement age. Probably 5 to 6 years. I'm experienced. Plan to take money from my investments in probably, 3 to 5 years is the best case, so maybe 6 to 10. We'll just say somewhat stable. I would hold it. I'd probably buy more because when you reinvest when things, that's why you have risk anyway. Oh, well, yeah. So I would invest in C. So this is the greatest 1 year gain and the greatest 1 year loss in 3 different hypothetical situations with an investment of $10,000. So this is what they mean by it's as important to minimize your loss as it is to capitalize on gains, because when you go down like 100% or 50%, you now need to have like 55% up in order to gain your money back. So I would do C, but I would also put in trailing stops and then reinvest when it's at the like by the dip. So that's fine. I tend to sell portions of my risk. No. We make our portfolio safe-ish to begin with, and then we only rebalance like annually on a regular cadence. No. You can hear about things from your friends or coworkers or YouTube or whatever, but you have to read the prospectus and go onto their website, watch a bunch of YouTube videos, understand what you are. Don't put your money in things that you don't on a high level understand. Okay? I have accepted that I don't understand absolutely everything for everything I invest, but I can somewhat explain what I'm investing in, and I understand why I'm investing in it. Don't invest on hype. Invest on informed opinions and conviction. Okay, so from September 2008 through November 2008, the stock lost over 31%. If I owned a stock investment the last 31 in 3 months, I would cry. Sell, hold. But buy. Always buy. Why? Because if you had kept your money in the stock market in 2008, if you had bought more shares, you would be so rich. You would be a multimillionaire today. So just trust the process. Generally, I prefer an investment with little or no ups and downs in value. I would accept lower returns. No. Give me all the returns. Let me put in stop losses. We're going to be good. In the long term, we're going to win. Okay? I am in basically 100. How about we just put like 5 and 95? So suggested allocation is 70-30. Wow. I don't know, like, I don't know if that was helpful. Do they just suggest 70-30 to everybody? That's kind of weird. I don't like bonds anyway. Not particularly. But if you replace bonds with SCHD, I understand what they're going for, but no. So, anyway, hopefully that was okay to go on this journey with me, but everybody thinks that they have a really high risk tolerance until they have skin in the game and it's red and it just feels awful and you just want to pull out all of your money. And my problem, it's not because I can just turn off. I can turn it off. I don't have to look at it. The problem is if I am using margin and I don't want to get a margin call, and my inclination is just don't lose money, or at least don't realize the loss in your money. Just weather it out. You'll thank me in 4 to 5 years. But actually setting up those stop losses so that if we do have another 30, 50, 80% drop, whatever it is, I can protect enough capital to pay my margin and not jeopardize my money that I would like to keep in the stock market. So that's I don't know how or why people play loosely with margin. It makes me more cautious. Like that's not my money. So anyways, thank you for watching. If you stuck with me this far, thank you so much. What is your risk tolerance? And I will see you later. Bye.